Hi, my name is Christoph van Tonder. I'm a chartered accountant here in Luxembourg, and today I'm going to show you guys how to do tax bookings correctly. Yes, it's such a simple booking, and actually there are a couple of bookings related to it, but it's actually so simple. If you just stick to the basics, I don't see why people should have any trouble doing these bookings correctly. And I see this, the main reasons I see this is being done wrong is because people deviate from the standard principles of accounting. So now today you won't have any excuse. I'll show you how to do it correctly. It's quite simple. Just follow the steps I am giving to. So to get into it, when is the question, are we going to have to book these taxes? As a matter of fact, there are three trigger events that will give you the how can I say the reflex to start booking. One, the most obvious one, is booking the taxes. So when is taxes going to be booked? The calculation of the taxes, and when is it going to be calculated? The simple answer is at the very, very, very end. No, you're not going to do the tax provisions in the middle of the year. No, you're not going to do that. If you are going to distribute an interim dividend, by all means, go ahead and make a provisional calculation. But remember, that's not the final tax calculation you're going to make. The final one is the very, very last booking you're going to make in the year. There's no booking going to follow it, and there's no reason why any booking should follow it, because that would be the closing of your accounts, which is the tax base of your taxes. So that being said, so we are going to, then there's a second frequently encountered trigger event when you're going to start looking at taxes, and that is your tax advance payments. Yes, I'm going to go through all of these, but that was in detail. But for now, just remember, first one, calculation taxes, second one, tax advancements, and then there's the last one, the third one. That is when you actually get your tax assessment, and you will be starting looking at how to reconcile your taxes. So now we are going to do the first one. When are we going to calculate? Which taxes are we going to calculate at the end of the year? So basically, your taxes which you are going to calculate at the end of the year are of three sorts in Luxembourg: the corporate income tax, your municipal business tax, and the net wealth tax. As I mentioned before, it's going to be your very, very, very last booking of the year. It's not going to be the second last booking of the year. It's not going to be the third last booking. It's going to be the very, very last booking of the year. And remember this, if calculate these taxes, remember, it's very important that you keep your calculation sheet. Yes. You're going to end up with this many times, so you have to keep your calculation sheet because it's worth its weight in gold. Today you remember exactly how it was, how you reasoned to get to those amounts. Yes, you should remember it's your responsibility as the accountant to calculate the taxes correctly, not that of the tax administration, because it's not in the job of the tax administration to look after the interest of your client. It's your responsibility to look after the interest of your client. So that's something very important. So when you are doing your tax calculations, it's important that you remember how and why you did it. There is lots and lots of room for interpretation, and sometimes it's very grayish. So it's important to keep the calculation sheet you have made handy for future reference. You're going to need it, believe me. I'm going to make a simple tax calculation. I'm just just going to suppose we had a taxable income at the end of the year of 150,000 euros. The company is located in Luxembourg City. For those you don't know, not all the municipal tax rates are the same. Remember this, sometimes they are different. They can range from anything from the minimum from Luxembourg City from to 6.75% to especially municipalities in the north located you can reach up to 9.9%, guys. So take care of this, and this is also very important if you have a company located in different municipalities. So remember this. So I'm just going to do a very, very simple example here. 150,000 taxable income for the year, calculated in the municipality of Luxembourg, 8,900 for your municipal business tax, and corporate income tax will be 24,075 euros at the current tax rate. And your net wealth tax, I'm just going to suppose the accountant said, okay, it's just going to be looking at the capital, looking at the balance sheet, it's just going to be the minimum taxes. Okay, so let's on the last day, how is this going to look? So this is basically how your accounting entry is going to look like. It's very simple. So you will first have your provisions for 2019. So very important again, guys, make a provision, make an account for your municipal business tax for the year. Split them. You're going to keep the accounts separate, keep it clear so that anybody picking up those accounts can easily follow what you've done with them. And remember, and so we have got provision accounts. Use the provision accounts, not the debt accounts. Why? Firstly, taxes, until you have received your tax assessment, they will always be uncertain. No matter how well you calculate it, they will always be regarded as uncertain. Of course, also the legislator made these provision accounts for taxes, especially for this reason. So keep them in taxes. Also, guys, remember, the administration has got 5 years to reassess your taxes. So keep them in provisions and book against the provisions, book them against your expenses, your tax expenses. This will really be your tax expenses. This is how your balance sheet is going to look like. So you will have your provisions on your balance sheet, and you will have the loss on your balance sheet. This is a non-deductible, and you will see them in your P&L at the end of the year. Tax advances is actually money you're paying to the government in advance. So you're actually lending them the money. It's not an expense. It's not at all expense if you pay. Yes, there's a cash outflow, but it's not an expense. This is really ABC accounting, so this should be just a reflex to anybody having some accounting experience. This is not an expense. This is an receivable we are having against the tax administration. So keep this in mind. This is the major pitfall. I've seen this done many times, and it's just this is the reason I'm doing this, is because people just keep on falling into this point. What they tend to do is they book against, they credit their bank account and debit an expense account. No reason to do that, guys. It's not an expense. As you will see later on, the real expense can be much different than the advances you're paying. So don't be a donkey, don't fall into this trap. In this example which I have, the tax administration calculated that for 2019 they should pay 350 euros in municipal business tax, corporate income tax 1,000, and net wealth tax 150 euros per quarter. So this will this you will put into your balance sheet as a receivable against the administration, and it will go quarterly. 1,500 will go out of your bank account. How is your balance sheet going to look like at the end of the year? So you will have your advances, 4 times 1,500, which you paid, 6,000 in total. And then you will still have your tax provisions which you made. Again, so just for clarity, just showing you guys the profit and loss is what you made in the provisions, not at all anything to do with your advances you paid. This can be really different. So last trigger event, what I'm going to speak to you about is when you get your tax assessment. Yes, that is the last tax event which you're going to book, and this is the typical how it will look like from the tax administration. You will get in, and then you will have to do a reconciliation with your provisions which you made and which you actually receive. Now, you should remember the guys at the tax administration, they are human. And as I said before, this is the reason why you're going to keep your tax calculation, because at this stage you would like to see how they calculate it. There's always room for interpretation issue. Let's say this guy did make a mistake. The tax administration calculated the net wealth tax a little differently and decided to go. So you will check if you got the same balances and same. If they got the same as you, very well. But please, also, just because they've got the same amounts doesn't necessarily mean they calculated the same way. It could just be coincidence. So get clear how they calculated it, to have a clear understanding, because they are going to apply the same principle the next year. And then at that stage, you might be confronted with an issue to align your accounts, and then it's going to be a bit more tricky. So keep in mind to reconcile, see how they calculate it, see that that both you and the administration are on the same page. Very important. Do that. It will save you a lot of trouble in the future. So then this will be the final booking. You're going to write back against the payable now. Now it's really a payable. So we are going to take out the provisions we made, and we're going to put them into actual debt. I'm going to come back to the net wealth tax. As you can see, 2019, 19 and 20. The net wealth tax is 20 because it's taken and calculated on the first day of January on the closing balance sheet of the year before. So keep that in mind. That's why I personally, I book the expenses for the next year in the current year if it's calculated. Because how come? It's a simple philosophical reason, and that is on what amount is it based? On what is the amount based? Is it based on next year? No, it can't be next year, because nothing happened next year, and that's the first thing which is calculated. So actually it is calculated on the sum of operations during the current financial year, and not the next one. So next year will be totally innocent. This year will be the guilty one. And that's why I'm saying, okay guys, another reason for this is keep it in provisions. Then you don't get into a situation where you give the shareholders or the management the idea that they can distribute more money than they can. And especially with smaller companies, this could be a pain, because you might end up distributing a dividend, taking out the cash from your bank and forwarding it on to the shareholders, whereas the next year you're going to start having to pay your advances already on your tax, on your net wealth tax. And smaller companies might not always have the same liquidity as bigger companies, and not that that's any case of reference you should use. Bigger companies can end up into liquidity problems as well, but especially take care of the smaller clients of you, not to give them an impression that they can distribute more than they can. So this is one reason I prefer keeping this on my books in the current year, showing it clearly. And there's nothing, strictly speaking, against that in Luxembourg accounting law. So then what we will see at the end, we will have our payable against the tax administration. This is really a true debt we are going to have. And then we can compare this with what we advance to them in the meantime. So this is very, very important that you know this, so that you can clearly see, okay, we paid them this advance for this, this, and this, to compare what you paid to them and for what you paid to them. So why is this very important? So you will receive as well with your tax assessment what they call your account a statement, which for what you paid for them when. So it might be that you actually paid the right amount, but they allocated it differently. So you might end up having paid, they calculate you paid too much net wealth tax and too little in corporate income tax. And the accountant on their side has to figure out to where he should allocate it. And they have lots of payments to do, and they don't have time to allocate and do your calculations for you. So please, when you're doing the payments, very important, split the amount so that they can see to which account they should allocate what. Because if they have a minus receivable in one category, they can charge you interest on that as well. And you don't owe them any money in net, but they can charge you interest. So pay attention to that. Very important. That's definitely something you're going to do. And at the end, once this is done, you can net off what you paid them in advances and what you still have to pay, so that you just pay them the rest amount. No need to pay them any more, no need to pay them any less. So guys, I hope this has explained to you how to do the bookings related to taxes correctly. So what I've not covered in this section is I've not tackled withholding taxes. I've not tackled any other taxes. This is just showing you the three main taxes you are going to have to pay. So guys, I hope this was insightful. If you liked it, don't hesitate to push the like button. And if you have any questions, do not hesitate to drop me an email. I would love to reply to you and exchange ideas with you. So go ahead. Thanks.